And good afternoon, Central Texas. This is the Real Estate Zone, our weekly radio show about Central Texas real estate. It's about making money, not losing money. It's about being educated. The phone number's here, 512-836-0590. That's 512-836-0590. Questions, comments, would love to hear from you. Don't forget, we do have a podcast, too. So if you'd like to listen to this show in its entirety and some of our other shows we have posted up on iTunes, just go to iTunes, type in John McClellan, Kevin Bown. That's Bown like town, or Real Estate 101. And our podcast will pop up, and you can download it into your iPod, iNano, iCar, iBrow, whatever you're listening to. Do it while you're hanging out or working out. That's on iTunes. Just type in Real Estate 101, and our podcast will pop up there for you. Also, our website is austinrealestatedaily.com. That's austinrealestatedaily.com, and we have some new blogs up there about what's happening with interest rates right now, so definitely recommend you check that out, austinrealestatedaily.com. Also, we have a Facebook page with the same name. You can check out some different graphs that I'm going to be talking about today about what's happened with mortgage rates. Kevin Bown is off today, so it's just me right here answering questions about your real estate situation, about your mortgage situation. So give us a call, 512-836-0590. That's 512-836-0590, or toll free, 877-590-5525. So let's get after it. What are we going to be talking about today between your phone calls? Remember, this is a call-in talk show. Well, number one, I think on everybody in the real estate industry's mind right now is what the heck happened to mortgage rates the last couple of days. Some gigantic moves we saw, huge moves in the market. This started all in mid-May and culminated into the last 3 days of just some gut-wrenching, huge moves to the upside in mortgage rates. In fact, we saw in the last 3 weeks, we've seen mortgage rates go from the mid-threes now into the mid-fours. That's a full percentage point jump in about a month-long period. Just in the last 3 days, we saw a quarter to 3/8, in some points, a half a point rise in mortgage rates. So we're going to be talking about what caused this movement. Number one, a little less than a month ago, and what caused this bigger movement here in the last couple of days. Also, we're going to be talking about some updates to USDA lending out there. USDA loans are zero-down property loans for residential financing for owner-occupied properties. It's a great loan, has low interest rates, low monthly mortgage insurance on it, unlike FHA. It's a great loan to get, but it is geographically restrictive, and because it's geographically restrictive, you have to go look at a map online. We've got a link to the new map that's going to be coming out in September. Some of the areas that are available right now will be disappearing. Some of those areas are going to be disappearing, so definitely want to get off the fence if you're thinking about using a USDA loan, because I know for a fact the Pflugerville, Hutto, and some other places around town, Taylor, are going to disappear from the eligible USDA list. You can actually check out that map on our Facebook page at austinrealestatedaily.com. Guys, don't forget, this is a call-in talk show. The phone number, once again, 512-836-0590. Let's go to Mac in South Austin. Mac, thanks for calling the show. You had a question.
Yes, sir. I'd like to know the process of the steps in bidding for a HUD home.
Okay, now, is this for a primary residence, or is this for an investment property? Primary residence. So HUD has a portal you have to go through, and they have, my best advice would be to employ a licensed real estate agent here in the Austin area. I'm in the mortgage banking side of it, but I have seen this process roll out more than a few times. The HUD has a portal that you have to go through, and there's a bidding process that takes place. And basically what they do is they take the top bid once all the bids, the time for the bidding is done. You can access this portal through any real estate agent here in town. So I would just maybe ask some friends and family who to recommend to find out to get access to that. Now, one of the things you got to watch out for when dealing with HUD homes, when you go to buy this property, what type of financing do you think you're going to use? Do you know if you're like how much of a down payment do you? Yeah, so what kind of down payment do you have available to buy a HUD home? Like 3.5%, 5%, 10%?
Probably 10%.
10%. Okay. So that would put you into conventional financing, which is probably going to be your best bet right now in Central Texas for HUD homes. The reason I say that is demand is so high for that price range, 300 and below here in the Austin area, that a lot of the homes that are put up on the HUD's website, the portal, are going for more than what HUD appraised their value for. And let me tell you why that's a problem. HUD does an appraisal up front on each one of these properties that they have listed that they sell to the public. Let's say that property is $100,000 and that's what the value comes in at. But let's say that you buy it for $105,000 because you wanted the house, you know it's worth it. The appraisal was done 2 or 3 months ago. We know that prices have moved up. If you use an FHA loan, you're required by HUD to use the existing appraisal that's on the property. So it's only that appraisal is only for $100,000. So they're going to base your loan to value on the appraised value, not what you're paying for it. So you'd actually have to put 3.5% down plus the difference between the appraised value and the true contract price on it too. So be very careful when you're doing that, especially if you go above HUD's appraised value. You're going to either have to bring the difference, or if you use a conventional loan, then you can go off whatever the appraisal comes in at. But if you stick with a government loan, you're going to have to use their appraisal because it sticks with the property.
Right. What about the earnest money? When does that come in effect as far as you have to put it up before you make the bid, or?
For the earnest money?
Yes, sir.
No, typically the earnest money is once the bid's accepted, that's when you have X amount of hours or time to days to get it in. Typically on a HUD home, it's $1,000 earnest money that you have to put up. They do have some $100 down payment programs out there too, but you still have to put $1,000 earnest money. It's very typical for a HUD deal. So you do have a time period after the bid's accepted to do that.
Right. Okay.
All right, Mac, thanks for listening to the show. We appreciate it. Guys, phone number here, 836-0590. That's 512. Don't forget, you got to use that area code now. Austin is definitely growing. We have 2 area codes now. 512 is this one, 512-836-0590. Questions, comments, would love to hear from anybody. Let's go to Joel. Hey, Joel, thanks for listening to the show. You had a question.
Yes, sir. My wife and I run a small business, and we're thinking of selling our home down here in Kyle and moving to a different area. And I said we're running into some issues with our tax returns don't show like a true earned income for the last couple of years. So
don't let the IRS hear that now. Come on.
What's that?
Don't let the IRS hear that now.
Yeah.
So you're self-employed, and this is pretty typical of a self-employed borrower. So your gross monthly income, or your gross receipts that you have in, do you file a Schedule C or Schedule E with a partnership or something? C. So
right.
Schedule C, sole proprietor. You have your gross income, all your receipts you took in, then you take all your expenses, right? And then the bottom line is what you owe taxes on. Well, right. And so that's what lenders use, is that bottom line. However, there are some ways to count back income on a Schedule C. Let me ask you a question. On your Schedule C, do you know if you took any depreciation?
I don't believe so. I'll have to ask my CPA about that.
Okay, and if you look on your Schedule C, there'll be 2 columns in the middle. It'll be on the column on the left. It'll say depletion or depreciation on there. That's actually positive income that you can count for qualifying. Also, do you know if you took any mileage write-offs within your Schedule C?
We did, yes, sir.
Okay, so mileage write-offs, you actually get to count part of that back on a percentage basis. So let's say you wrote off 5,000 miles last year. You get to count a portion of that back, and that can actually be a pretty large dollar amount. Did you write off any home office expenses?
We did, yes, sir.
You can count part of that back also. So here's what you need to do. When dealing with self-employment tax returns for trying to qualify for a mortgage, make sure that the loan officer that you're dealing with is versed with that type of tax return, because it's not lending 101. It's like lending 102 or 103, and you have to have a very experienced person who knows how to read these, that just doesn't look at the bottom line, that's going to find the actual income and knows some of Fannie's, Freddie's, and FHA's way to count other income back in there, even some of the stuff you write off.
Okay, and we're applying for a VA loan. Will that...
It's the same thing with a VA loan. Those underwriting standards are across the board.
Fantastic. Excellent, sir. Well, I really appreciate the phone call, and great show you have.
All right. Thanks, Joel. We appreciate it. Guys, phone number here once again is 512-836-0590. That's 836-0590. And just a reminder to all of our listeners out there that if you like what you hear, that's actually what I do for a living. I am a licensed loan officer here in this great state of Texas. So if you need some advice off the air, be sure and just go to my website at johnmcclellan.com, or you can even give me a call at the office at 512-279-1150. 1150, 512-279-1150. Leave me a voicemail, and I'll get back to you as soon as possible. All right, let's get back to the show at hand. We're talking about, we're talking about some of the things we're going to be talking about today. And we touched on mortgage rates just a few minutes ago. I'm going to be talking about that. USDA is changing their map. We have a link to where you can actually go see where those changes are, what they are. Also, we're going to be talking about your credit scores and why they're so important, not just for buying a house, but in everyday living, and how to increase your cash flow by increasing your credit score. Also, the Texas Supreme Court had a big ruling yesterday, and it pertains to Texas home equity lending. We're going to go into the details of that. If you're right in the middle of refinancing your home and getting cash out, this will affect you. There is no grandfather in. This will affect you, so you definitely want to listen to that. Also, we're going to talk about investment properties and some of the misconceptions about buying investment properties. And also, we're going to obviously talk about this crazy, frustrating real estate market that we live in. Guys, we're going to take a quick break. When we come back, we're going to talk about all that, and we're still taking your phone calls at 512-836-0590. That's 836-0590. You're listening to The Real Estate Zone. We'll be right back.